It's time for another midweek update. And today my guest is Adam Sarhan. Adam, how are you?
Excellent. How are you?
I'm doing great. Thanks, Adam. So Adam, we are. We're sort of in this quasi reality where there's questions surrounding the security of the United States internally and politically, but the market doesn't care. And let's focus on that. So what are you liking? What are you wading into in these early days of 2021?
Sure. So there's a lot of areas that are perking up and that are really catching my attention. One of them happens to be commodities. Commodities for a long time have been largely just out of favor. Last year in 2020, we saw a big move in tech stocks. We saw a big move in the stay-at-home stocks. But at the same time, really a lot of commodities just haven't really been doing much. Oil, for example, was just dead in the water for a long time. A lot of the agriculture commodities like corn, soybeans, wheat, oats, so on and so forth, even the soft commodities like coffee and sugar and cocoa have really been catching a nice bid recently. And the one big, why is that important? Well, two reasons. One, we're going to pay more at the pump. People care about gas prices. I guess if there is a lockdown, then they're not going anywhere. But if there's no lockdown, they're driving. But right. On a more serious note, the reason why we do care is the Federal Reserve has made a very clear mandate that they want inflation to go up. And food and energy, which happen to be those two commodities, energy and food, prices right now for the last few months have been going up. So what that leads me to believe, when you extrapolate that going forward for the rest of, at least the first half of this year, if not more, inflation, at least food and energy, will start ticking up. Why does that matter? Because if it goes up too far, too fast, that could lead the Fed to do a taper tantrum like what happened a few years ago and stop their easy money, just pedal to the metal policy. And if they start scaling back with that easy money, whether or not it's not buying as much as they're buying now, or they start raising rates, that could really change the dynamic on Wall Street. And that's why that matters.
Wow. Yeah. Okay. Well, then, so in terms of the fiscal spending, the fiscal stimulus that is widely expected to permeate the developed world's response to COVID, do you think that is going to drive further asset prices further on the commodity side, specifically on the metallic commodities, which obviously are going to be the beneficiaries of any sort of major fiscal programs?
Yeah, I think for sure. If you look at copper, for example, Freeport-McMoRan, FCX, is a good example of a stock that just benefits from copper prices. And if you take a look at that, it went from $14 just a few months ago to 32 now. I mean, the stock's been on fire. Look at US Steel, ticker symbol X, went from $10 to 22 in the last few weeks, if not last few months. I can go on and on. SLX is the ETF that tracks steel, so a basket of steel stocks, sitting very strong on a 52-week high, and I believe the highest level since, 2018. And you go back even further, almost back to 2013. And steel prices haven't really gone anywhere for a long time. But in the last 3 to maybe 6 months now, they've been ripping higher. So copper's been ripping higher, steel's been ripping higher. If you go look at iron ore or aluminum or any of those other metals, if you will, they're all really, really strong uptrends. And that all paints the picture of what I mentioned earlier with that higher inflation may be on the horizon.
Sure. I find it interesting that gold has not really sort of maintained its effusive upward trajectory, even after, today we're hearing about Biden's got a $1.5 trillion stimulus program to follow upon the heels of what is somewhere between $900 billion and $2 trillion stimulus program anyways. And so I would have thought that would have been bullish for gold back in March. The $2.2 trillion stimulus package that at the outset of the pandemic caused gold to set its all-time high level around 1940, 1950, was it? Or sorry, 2050, 2070, I believe it was. And on the heels of these announcements, gold's been whacked down to 1847. How does that sort of reconcile in your universe?
Yeah, riddle me that, right?
Yeah. So I don't know. That's why I'm asking. I'm like, I really want to know.
Yeah. So I think the gold's all-time high, if I believe, you're right. It was 2089-ish or somewhere in that range back in the summer. And you had a huge explosive move in gold, James, as you just mentioned, and it broke out to a new all-time high. The last time it hit that level around 2000 was back in 2012. It was right after the '08 meltdown, and then we came back up, the resurgence, again, due to your point of stimulus in '09 and 10, 11, 12. Gold just ripped higher. And then it paused, and then it went into a little bit of a bear market for, well, not a little, but I guess it's 5, 6, 7 year bear market up until just recently. And then from 2012 to 2020, you really moved sideways, if down a little bit and then moved sideways. Now we've just retested those highs and then you pulled back 200 points. To me, gold is the first big bullish move in this new inflationary world we're entering. And I think the Fed, what they're doing here is they're deliberately creating inflation because it just hasn't been there for the last decade. And remember, part of their mandate is they need inflation to be around 2%, and just hasn't been there. So they're stuck out of options here. So gold, to your point, I think gold is going to rip higher. It's just pausing to catch its breath, because after that colossal move, going back even longer, right, like you said, March to the summer, it had to just pause. And I think right now, people are looking at Bitcoin. Is that an alternative to gold? Is it not an alternative to gold? Why is gold not participating? And that's really good for me because it takes a lot of the froth out of the gold market. And then when no one's looking, everyone's forgotten about gold, boom, you see it blast off to the races. That's at least my 2 cents on what I think what's going to happen here.
Interesting. So among the other sectors that are extremely frothy in this new year, and is at least partly related to the Democratic control over all three chambers of government, is the cannabis sector. Do you have any thoughts on where that's going to take us in 2021?
Yeah, I think eventually it's going to be a matter of when, not if. Marijuana will be legalized in the United States, just like it was in Canada, just I believe it was last year. So, and other nations around the world as well. It's just a trend. It's one of those things where it's inevitable. The old guard doesn't want it to become legalized, and it's losing the economics of it. That doesn't make any sense anymore, because for all intents and purposes, it's happening. People who want to buy marijuana products, CBD, whatever, LMNOP, it's not my world, so I don't know, but they're buying it, right? So the government side of the argument is like, listen, we might as well monetize it and make money because the transactions are happening anywhere. You can just go to a doctor and say, oh, my neck hurts or whatever, and give me marijuana. So the government's like, okay, I need to just make money off this and let's tax it, because there's a huge amount of money that could be generated off of all that, the goods that are being sold, if you will. So sure, marijuana stocks have been out of favor for a long time. Now that you have the three, I guess you have a real consensus that marijuana will be legalized. It's a matter of when, not if. And then a lot of states are jumping on board that legal train, and they have been for the last several years. But they're looking at case studies like Colorado, California, so on and so forth, that it actually works. And all the dark side of, oh my God, it's a gateway drug, and then, so on and so forth, that whole argument just hasn't really unfolded. Look at Canada, for example, or other developed nations that have legalized it. Not only economically does it make sense, but we're really starting to see from a social standpoint, it's not wreaking complete havoc. Now, morally, do I like it that kids can go say, hey, marijuana is legal, I'm allowed to do? No, I don't like that at all. But my opinion doesn't matter, first off. And second off, dollars and cents at the end of the day tends to trump everything else. So marijuana stocks have been extremely undervalued. They've had a big jump here. Probably pause, digest a little bit, but fast forward 12 to 18 months, 24, 36 months down the road, you probably see a lot more money flood into these areas.
Sure. Do you think that the tech sector is going to be the principal beneficiary of the global stimulus package as it has been for the last decade? Or do you think that trade is just so crowded and the price is so overblown that even, the wildest bull can't bring themselves to buy Amazon at $4,000 a share? Do you think that's the reality we're going into? And if so, what sector is going to be the alternative?
No, that's a really, really good question. I mean, people have been talking about the end of tech. I remember since the dot-com bubble back in 2000. Okay, that's it. It's over. Amazon's done. The dot-com bubble's done. All that kind of fun stuff. If you remember trading back then, it was actually Greenspan, one of the former Federal Reserve heads of the Federal Reserve, said it best. It was called irrational exuberance. And he said that back in like 96. It was before 98 and 99 and 2000. And what we're seeing now is, in my opinion, irrational exuberance once again, in manifesting itself differently. Point that I'm making here is that when you want to go against tech for any reason you want, it tends to find a way to come right back up and go up. Why? Because if you look at the economic might of the US and Canada and Europe, the Western world for the most part, the real engine of the economy is technology, whether it's manifested directly in tech companies or if it's manifested in some other way. But using tech in some capacity is disrupted our lives, and it continues to disrupt our lives. Look at Apple this year going into the car business. There are rumors that they're going to come into, make a smart car. And if that happens, whoa, what's going to happen next? So if you look at the global economy, the lower level, low skilled, jobs like manufacturing, all that kind of stuff has been outsourced to a large part to the Far East. And then the high level, highly intellectual jobs, selling information online, whether it's tech or Zoom or whatever the case may be, the biggest companies in the world tend to be tech companies. So from a dollar standpoint, valuations aside, because you're 1,000% right, you can't make a valuation argument, but sometimes the momentum just takes over. And as the game of musical chairs, as the music is playing, everybody's reacting well, and tech stocks are going up. It's a great time to make money. The one point of caution that I would underline, highlight, italics, and all that fun stuff would be when the music ends, make sure you're not the last person standing.
Yeah, right. Make sure you got a chair. And
Yes.
then, so the energy trade is another one that's a bit of a head scratcher. I mean, oil prices have been more or less on a recovery trajectory, yet there's really nothing to suggest that everybody's going to start packing their bags and heading for a cruise ship anytime soon. So how does the future of energy look to you as an alternative to tech?
It's a great point. Energy, there's divided into different areas. One of the strongest groups in the market are the solar stocks or alternative energy stocks. You could take a look at FSLR, which is First Solar, or look at the ETF TAN, TAN, which is an ETF that just tracks a basket of solar stocks. And they've had a huge run over the last 6 to 12 months. And energy itself, that's one side of energy, alternative energy. The other side, the EV side, the electric vehicle side, anything related to that, that's been very strong recently. But the other side is old, think of it, new energy and old energy, oil, gas, natural gas, so on and so forth. Those stocks have been left for dead for a long time. In fact, Salesforce.com moved into the Dow Jones Industrial Average, and it replaced ExxonMobil. Exxon was removed from the Dow, 100-year-old company, so on and so forth, started by Rockefeller. It's a major energy play, but it's out of the Dow. It's just a sign of how things change. That being said, I'm very bullish on energy right now, both new energy and old energy, if you will. Oil, gas stocks have been undervalued for a long time. And the last few weeks, they're really coming back to life in a big way. Today, Delta reported earnings. And if you look at Delta stock, it's up nicely. Last time I checked, it was up, 2 or 3%? Yeah, about 4% now, almost 4%. And after a nice tight consolidation, and several cruise lines are also up nicely today. So I'm seeing money rotate out of those frothy areas that we mentioned and move into these undervalued areas for logical reasons, because people can't just continue to chase forever.
Sure. Do you think this is the market front running the recovery in the travel sector then?
1,000%. If you look at Wall Street, I'm asked all the time, James, and you know this. If you wait, there's two things. There's Main Street, which is the economy, and then there's Wall Street, right? For whatever reason, the Wall Street tends to move anywhere from 3 to 9 months or 12 months before Main Street, both up and down. So if you look at back in March of 2020 or 2020, you had a big sell-off in March of 2000, and stocks got crushed. They were down about 30% in 2 or 3 weeks. And Main Street was just beginning to shut down. Profits on Main Street got crushed 3 months later, 6 months later. So and then subsequently, Wall Street recovered at the end of March and started ripping higher April, May, June, and July, so on and so forth. And then the economy started to recover thereafter. So Wall Street, what to me is always, it tends to be, not always, but the vast majority of time, to make sure that I'm properly hedged when 3 to 6 months, if not 9 months, front running what actually happens on Main Street.
You bet. All right, Adam, that's a great update as usual. We'll leave it there for now and come back to you soon. We'll see you